Welcome to the Northbound Wealth Podcast. All opinions expressed by Brent, his co-host, or his guests are solely his own opinions and do not reflect the opinions of Northbound Wealth Management LLC. This podcast is for informational and educational purposes only and is not intended as personalized recommendations or fiduciary advice. It is not intended to provide and should not be relied upon for any investment, accounting, legal, or tax advice, or as a solicitation to offer or to buy any securities. Clients of Northbound Wealth Management LLC may maintain positions in the securities discussed in this podcast.
Hello, everybody. Today is December 8th, 2025. Thanks for tuning in to the Northbound Wealth Podcast. We're going to review last week and talk about some market stuff, and I hope you guys enjoy this show. The S&P 500 index edged up 0.3% as gains led by the energy and technology sector slightly outweighed declines led by utilities and healthcare. That's what happened last week. So that's the week of basically December 1st through December 5th. The S&P 500 ended Friday's session at 6,870, spot 40, and is up 17% for the year. Delayed government data released Friday showed the U.S. consumer spending growth slowed in September. The annual personal consumption expenditures headline price index accelerated to 2.8% in September from 2.7% in August. But the Federal Reserve's preferred inflation metric, which excludes food and energy, slowed to 2.8% annually from 2.9% in August. The data, which had been delayed by the federal government shutdown, come as the Fed's FOMC meeting is set to make a decision on interest rates this upcoming week. So that's in a couple days. The odds of the FOMC making a 25 basis rate point cut were at 87% on Friday, down slightly from 88% on Thursday, but up from 62% a month ago, according to the CME FedWatch tool. The energy and technology sectors had the largest percentage increases this week, climbing 1.4% each. Communication services, consumer discretionary financials, and industrials also edged higher. The energy sector's advance came as crude oil futures also rose. APA was among the top gainers in the sector, rising 8.5%, as Johnson Rice upgraded its investment rating on the stock to accumulate from hold and raised its price target to $40 per share from $35. Microchip technology was the best performer in the tech sector, jumping 23% on the week as the company said late Tuesday it now expects fiscal Q3 adjusted earnings per share guidance of about 40 cents, which is at the high end of its prior guidance of 34 cents to 40 cents. All right, on the downside, utilities fell 4.5%, followed by a 2.7% loss in healthcare. Materials, real estate, and consumer staples also declined last week. The utility sector decliners included shares of Exelon, which fell 7%, the company pricing an offering of $900 million of its 3.25% convertible senior notes due in 2029. So earnings reports are expected this week from companies including Oracle, Larry Ellison's company, so we're going to pay attention to that, Adobe, Broadcom, and Costco. Costco's an interesting one. Broadcom's a good one. So those are notable, and we're going to be tracking that for you. All right, economic data will include the September U.S. trade deficit as well as delayed reports on October job openings and the third quarter employment cost index. The FOMC will hold its two-day December meeting, concluding with a rate decision on Wednesday. That would be December 10th. So again, following all of that for you and tracking the U.S. productivity at 3.3%. U.S. unit labor, non-farm business, quarter over quarter, 1%. Let's see, target federal funds rate lower limit, 3.75%. U.S. initial claims for unemployment insurance. Well, there's 191,000. All right, so that's down a little bit from the weekly. So we look at U.S. trade deficit of $59.55 billion, and then the 30-year mortgage rate last week was at 6.19%. Right now, today, I'll mention this later on the Mortgage News Daily that it's around 6.3 to 6.4%. So it's up. All right, here's another aspect. Those of you who like dividends, so believe it or not, Google does pay a dividend. And some of these companies might surprise you. I might be make mention of them as we go forward, but I like dividend payers, and they're good in many ways. I also like companies that reinvest in themselves and do share buybacks and grow and raise the dividend. Heck, I like it all on that end. But as a shareholder, dividends, looks like ex-dividend dates for this upcoming week, and this is kind of something new I talk about, is Google, United Health, Analog Devices or ADI, Walmart, Chubb, which is an insurance business, and then Automatic Data Processing or ADP, CME Group, and the Williams Brothers. Looks like Becton, Dickinson, and Co. also. All right, stay tuned for the next segment. Hey everybody, we're going to go over stock market performance, major index returns summary. So this is the summary and of market performance. It's not exhaustive. We're not going to get like into Bitcoin, Ethereum, and then all kinds of other different things, but just major indexes. I do that generally every time I release a podcast. I'll talk a little bit about that. So let's dive into the Dow Jones Industrial Average. All right, 30 Dow stocks or Dow components. Year-to-date trailing numbers up 14.33%. The S&P 500, which is 500 companies, is up 17.98% this year in 2025. That's a trailing year-to-date number. We've got the NASDAQ, which is a tech-heavy index. It's up 22.45% year-to-date. MSCI EFA index, which tracks developed overseas stock markets, up 29.66%. And that is by far the best year, in my opinion, of recent memory, like the last 15 or 20, that the international markets have done very, very well relative to the U.S. markets. You got stronger gold. Silver's likely to break out, but gold is at all-time highs. Basically, generally speaking, has really moved up into the 4,200 an ounce space, which is substantial. Probably on the weakening dollar. That helps international markets, by the way, when the U.S. dollar is weaker relative to other foreign currencies. And so you see a move in gold and a move in international markets when you have a weaker dollar. So we'll have to watch the dollar and see what's going on there. All right. Other indexes, let's see there. The 10-year treasury rate is something that we look at a lot. 4.14% is what the 10-year note is at. All right. Thank you, Y Charts, for that information. And out on my blog, I did put out the chart of the week. And what it shows is the Magnificent Seven. Okay. And for those that don't know, the Magnificent Seven companies are Alphabet, which is Google. Okay. Amazon, Apple, Meta Platforms, which is formerly known as Facebook, Microsoft, NVIDIA, and Tesla. Okay. How have those companies performed over the past 5 years relative to the S&P 500 index, which is cap weighted, and the S&P 500 index, which is equal weighted? Okay. So there's two indexes there on the charts. If you subscribe to the blog, you'll be able to see this. But the Magnificent Seven total return over the past 5 years, that's from 2021 to today, total return 261.1%. That is substantially outperforming the 99.76% of the S&P 500 cap weight. Okay, just the regular index itself. Now, if we equal weight all that out, take out the concentration of the Mag 7, there's even further outperformance by the Mag 7 over the equal weight, which is only 65.92% over the past 5 years. So I have that chart out there as of December 8th, pulled that from Y Charts, and I thought that would be something to think about. And the big question is, will the outperformance still continue? And I also, in light of that, pulled some information from Investopedia, which I thought was educational and helpful to understand. What are some of the factors driving the Magnificent Seven stocks? So what they are, and then why. The group of stocks known as the Magnificent Seven is at the forefront of technological changes across the economy, and they consistently develop new products and services that drive consumer demand and business growth. Here are other traits common among the Magnificent Seven stocks. Number one, adaptability. Each has adapted to changing market conditions, including shifts in consumer behavior and technological advances, by continuing to invest in research and development. Number two, financial health. All have had strong financial health, robust earnings, revenue growth, and healthy balance sheets, making them attractive for investors for growth. Number 3, global reach. Their operations and influence span the globe, allowing them to tap into diverse markets and benefit from international growth. Number 4, strong market position. So the Mag 7 have strong market positions in their sectors, often holding the dominant market share that gives them a competitive advantage or competitive edge. Number 5, worldwide brand recognition. So Mag 7 companies have had strong brand recognition and a loyal customer base, which could mean consistent revenue streams and the ability to introduce new products successfully and profitably. Because of their size and reach, these companies all face regulatory risks. Regulation changes, especially in data privacy, antitrust laws, and international trade, can significantly influence these companies. More broadly, widespread economic changes affect them because of their broad reach, including interest rates, inflation, economic growth, consumer confidence, and investor sentiment. And I want to thank Investopedia article by Cedric Thompson for that. Updated last at the very end of October and reviewed by Jeffreda R. Brown, fact checked by Vicky Velasquez. So, and I really like some of their information. So I kind of like Investopedia as a resource or a reference for information as far as trying to understand financial markets. It's always a good place to go spot check. So fun fact for those of you who are listening to this podcast. All right. Tax tip of the week, too. I want to wrap that up. The IRS website offers a wealth of information just beyond just filing tax information. Here are some things you can find on the site that might help you as a taxpayer. Number 1, the Taxpayer Bill of Rights. The set of fundamental rights tells you what to expect when dealing with the IRS. Number 2, resources on how to apply for 501c3 status. Here are webinars and resources to help organizations apply for and maintain their tax-exempt status. Information on IRS tax volunteer opportunities. Look for learn how to give back and help people file their taxes. Number 4, information on the latest tax scams. Know what to look out for and how to stay safe. Number 5, the interactive tax assistant. Get personalized answers for your tax questions. This information is not a substitute for individualized tax advice. Please discuss your specific tax issues with a qualified tax professional. And that tip was adapted from irs.gov. All right, stay tuned for the next segment. According to a CNBC article published on December 5th, 2025 by Jessica Dickler and Kate Moore, earlier this week, the White House, in conjunction with Michael Dell, founder and CEO of Dell Technologies, and his wife, Susan, announced one of the largest donations ever to benefit American children. The Dells' $6.25 billion pledge goes hand in hand with a new federal government program focused on early wealth building. The money will go into a new child savings account for children under the age of 18. Those who qualify can receive a $250 grant from the Dells commitment or a one-time $1,000 initial deposit from the government to seed the so-called Trump accounts. Okay, I've talked about this before on the podcast, those Trump accounts, which is if you have a baby born in this year or after, you can have the government deposit $1,000 into an investment account. Here's what families need to know about how the program works. So according to the CNBC article, what are Trump accounts? Trump accounts are a type of tax-advantaged savings and investment account, were created under President Donald Trump's big, beautiful bill, which passed in July of 2025. The accounts function like an individual retirement account with some exceptions. These accounts can receive contributions from multiple sources, such as family or employers, and the funds grow tax deferred. How do you open a Trump account? Trump accounts are not yet available. However, families who want to open one can start the process now. Any authorized individual, a legal guardian, parent, adult sibling, or grandparent, can open a Trump account on behalf of a child age 18 or younger as long as the child is a U.S. citizen. To open the account, an election must be made on IRS Form 4547, named after Trump's presidential terms. The form can be filed separately or with your 2025 tax return. Starting in mid-2026, You can also make the election online at trumpaccounts.gov. After filing the form, the Treasury Department will confirm that the account has been opened with an authentication process, according to a White House document. That fact sheet does not specify what the process will entail, so we still have to wait for that. Initially, Trump accounts will be held with the Treasury's designated financial agent, with the opportunity to transfer the full balance to your preferred brokerage firm at a later date, the Treasury said this week. So, how do you claim the Trump account free money? Once an account is established, eligible children may receive either the one-time $1,000 contribution from the Department of Treasury or the $250 Dell Family Grant deposited to their Trump account. Parents of babies born in 2025 through 2028 can elect to receive the $1,000 known as the, quote, pilot program contribution on Form 4547. There are no income requirements, and everyone is eligible for the government's seed money. Although the Form 4547 can be filed at any time, no pilot program contribution will be deposited in the Trump account of a child earlier than July 4th, 2026, according to the IRS. So, here's a really good depiction on this article. If you want to go look it up, you can Google it on CNBC's website, or out in Google, you'll find the link to it. Share of family households that earn less than $150,000 annually by congressional district. You can see that. That's a U.S. Census Bureau American Community Survey of 2023. So it's 2023 data. And you can see all the different shades of blue, and some very dark blue, almost looking like it's black. But basically, you can see where the income and wealth distribution is laid out across the country by just a depiction, which is actually pretty interesting. Children 10 or under and born before January 1st, 2025, who wouldn't qualify for the $1,000 initial deposit from the Treasury could get a $250 contribution if they live in a zip code where the median income is $150,000 or less. That money is aimed toward lower income families based on their zip code, and there is no additional form required for the Dell contribution. Children older than 10 may benefit too, if funds remain available after the initial signups, according to a fact sheet from the Dell Foundation. CNBC analyzed U.S. Census Bureau data for median incomes and population ages for each U.S. zip code. Only about 3% of zip codes have median incomes above $150,000. So that's a big swath of America. U.S. zip codes by median and average age household incomes. You can see that chart laid out on the website. And then they say how you can fund a Trump account. As of July 4th, 2026, so that'd be next July, parents, guardians, grandparents, and others will be able to contribute up to $5,000 a year in after-tax dollars. Okay, $5,000 a year after-tax dollars up until the year before the beneficiary turns 18. The annual contribution limit indexes for inflation after 2027. Employers can also contribute up to $2,500 per worker per year, which is part of the $5,000 limit and won't count as taxable income, according to the IRS, which is super important that the IRS signs off on. I'm being kind of sarcastic. Okay. This figure also adjusts for inflation after 2027. Oh, so inflation, like the 2% target of the feds, or the 3? Yeah. Okay. Additionally, and again, sarcasm, I'm just having fun. Additionally, qualifying charitable organizations and state and local governments may make contributions that do not count towards the $5,000 limit. What are the investment options for Trump accounts? Trump account investments are restricted to, quote, broad U.S. equity index funds, end quote, according to the Treasury, such as mutual or exchange traded funds. Those are ETFs. These assets must track a qualified index, can't leverage, which typically uses debt or borrowing to boost returns, and can't exceed annual fees or expenses of above 0.1%. While the definition of qualified index remains unclear, which they got to clear up, these criteria could include about 186 mutual funds and ETFs, according to data from Morningstar Direct. I really like that idea. I think that people need to have ownership and involvement in the stock market and this country. Frankly, if you're going to live here and be here, gotta actually care about it. How much could your Trump account grow? Experts say the one-time $250 or $1,000 grant won't grow substantially over the first 18 years without additional contributions. For example, $1,000 funded at birth could be worth around $4,700 by age 18, assuming a 9% annual return and without considering inflation, according to chartered financial analyst Jason Norris. Quote, if the same family is able to contribute $50 a month, the account value at age 18 potentially could grow greater to more than $29,000, end quote, said Norris, who is director of equity research and portfolio management at Ferguson Wellman Capital Management in Portland, Oregon. That is a meaningful difference over that period of time, he said. The goal is to create a broad-based stakeholder economy, said Jason Iwas, associate director at the Aspen Institute Financial Security Program, a nonprofit forum. Half of the population doesn't own stocks, he said. When it comes to wealth building opportunities, particularly by investing in the stock market, this is a way to make a statement about getting a foot in the door, Iwas said. Many families continually miss out on stock market gains while the wealth rises fastest for those at the very top. Data from the Federal Reserve also shows as the value of their investment holdings continues to grow, the top 10% of Americans hold more than 87% of corporate equities and mutual fund shares. That is a big problem. As an aside, I think that's a big problem. I think people need to get involved and save and invest, but it's really difficult when the cost of living and it's harder to make it in America when you're not making enough. That's a problem. By the way, healthcare costs and daycare costs for families is also an issue, plus home affordability. Let's just start piling on all the issues. There's plenty of them we can point to. And I think this administration is working towards working that out. I would hope that all administrations, no matter who it is working on behalf of Americans to make life better for our future generations. When can you withdraw funds from a Trump account? Well, generally, it's not possible to withdraw Trump account funds before age 18, but there are limited exceptions, including certain rollovers, distribution upon death, and for excess contributions, according to the IRS. You may roll over the entire account to another brokerage known as a trustee-to-trustee transfer. Certain rollovers to achieving a better life experience or ABLE accounts for individuals with disabilities may also be permitted during the year the child turns 17. Once the child reaches 18, the standard rules for traditional IRAs apply. Withdrawals before age 59 and a half are generally subject to income taxes and a 10% penalty. There are certain penalty exceptions, such as for distributions for higher education expenses or first-time home purchases. So did you hear that? Exceptions, distribution of higher education expenses or first-time home purchases. Just repeating that just to drive it home because that's awfully helpful for families. What are the alternatives to a Trump account? So Trump accounts are like other savings account options that already exist, including 529 college plans, which have higher contribution limits. In fact, there are at least 11 alternative tax advantage savings vehicles, each with different rules, limitations, regulations, according to the Tax Foundation. Some, like a Roth IRA, are geared toward retirement, while others, like a 529 plan, are aimed at educational expenses. Some financial advisors say that the Trump accounts may not offer the best tax incentives, but with every case, the bulk of Americans who can take advantage of these accounts are high-income households, experts also say, because they can afford to make the maximum annual contributions. So, food for thought as you hear about these Trump accounts and then the Dell family making a $6.25 billion donation and contributing towards citizens of America in ways that we haven't actually seen in the past too often, by the way. So there you go. We'll move on to the next segment. Thanks for tuning in. Hello, everybody. Today is December 8th. Paramount makes $77.9 billion hostile bid for Warner Brothers after Netflix struck a deal. So the offer comes days after entertainment company reached $72 billion deal with the streaming giant by Lauren Thomas with the Wall Street Journal. So check this out. Let's see. Paramount stocks trading up 7.63% today. Warner Brothers is up 4.87. Given that news, it's interesting. Netflix is down 4.58% on the news today on that. But let's see here. Monday, taking its case for acquiring the storied entertainment company directly to shareholders just days after Warner agreed to a deal with Netflix. So Paramount's run by David Ellison. He's arguing that it's all cash, $30 a share offer for all of Warner, owner of networks such as CNN, TBS, and HGTV, as well as the HBO Max streaming services. A better deal for shareholders and more likely to pass regulatory muster. Paramount said its offer provides shareholders $18 billion more in cash than Netflix consideration. We're really here to finish what we started, Ellison said on CNBC Monday morning. Netflix agreed to pay $72 billion or $27.75 a share for Warner's studio and HBO Max streaming business after the entertainment company splits itself into two in a cash and stock deal that the companies announced Friday. So Paramount's decision is to take its offer directly to Warner's shareholders could set up a messy public battle for the future of Warner's coveted assets like HBO, Harry Potter, and DC Comics. Paramount said its deal would be, frankly, fully backstopped by the Ellison family and Redbird Capital, along with $54 billion of debt commitments from Bank of America, Citi, and Apollo. Paramount also said it has equity commitments from the sovereign wealth funds of Saudi Arabia, Abu Dhabi, and Qatar, as well as Affinity Partners, the private equity firm of Jared Kushner, President Trump's son-in-law. All of those groups agreed to forego any voting rights, Paramount said, which could ease the deal's path in Washington. Tender offers are time-consuming and expensive and may have failed. It is especially audacious for Paramount, which has a market value of around $15 billion, to effectively go up against Netflix, worth well over $400 billion. Netflix declined to comment on Paramount's tender offer. The offer values Warner at $108.4 billion on an enterprise value basis. Paramount on Monday accused Warner of never meaningfully engaging with it, even as it submitted 6 takeover proposals over the past 12 weeks. Shareholders have until January 8th to decide whether to tender their shares unless the time is extended. We were told repeatedly that they wanted all cash. We delivered all cash, Ellison said on CNBC. If Paramount prevails, the iconic Warner studio and the CNN news channel would become part of a growing media and tech empire of the Ellisons and his father, Larry Ellison, the Oracle co-founder, who is close to Trump. Already, the family is set to play a major role in the TikTok's U.S. operations after a preliminary deal the president helped broker. Paramount warned Warner's lawyers in a letter last week that it believes a deal with Netflix wouldn't close because of regulatory roadblocks in the U.S. and abroad. Netflix included a $5.8 billion breakup fee in its agreement, one of the largest ever, a signal of its optimism that it would be able to close the deal, co-chief executive Ted Sarandos said. The company is highly confident about the approval. Trump, speaking to reporters before a Kennedy Center event Sunday, said Netflix deal for Warner could be a problem, end quote, because it would result in a large market share for the streaming giant. They have a very big market share, Trump said, and when they have Warner Brothers, that share goes up a lot, he added. I'll be involved in that decision, he said. So Trump also took aim at Paramount on Monday in a social media post criticizing the company for having Representative Marjorie Taylor Greene, a Republican who has sparred with him on 60 Minutes recently. He suggested the CBS News magazine has gotten worse since Paramount took control over it. If Warner walks away from its deal with Netflix to strike a deal with another suitor, it will owe Netflix $2.8 billion, according to their agreement. If Netflix survives the challenge from Paramount and completes its deal with Warner, it would cement its dominant role in Hollywood. it would be in a position to accelerate changes as the industry considers the future of movie theaters and the role of artificial intelligence will play in the content business. Netflix's winning bid for Warner took the market by surprise, in part because the company had long built its business rather than pursuing acquisitions, and because weeks earlier, one of its co-CEOs suggested it wanted to avoid a big merger, its largest deal before Friday that had been worth around $680 million. But Netflix had been quietly studying the Warner Brothers entertainment assets, and its bid came together quickly, the Wall Street Journal reported. Though Warner agreed to a deal with Netflix at a lower price than $30 a share, Paramount had previously offered Warner concluded Netflix deal was really worth $31 to $32 a share. People familiar with the matter previously told the Journal. It's because its shareholders would continue to own shares in both companies after Warner Discovery's split. So Paramount, in its letter, suggested such reasoning is unsupported by the business fundamentals. Warner's shares closed Friday at $26.08 below the price Netflix agreed to pay, and implying some skepticism in the market that the transaction will ultimately close. Paramount's shares closed Friday down almost 10%. It was an unusual sell-off for a losing party in a bidding war, as investors typically cheer a company avoiding such a big expense in the case of tens of billions of dollars. Paramount's shares rose 3% Monday morning, while Warner's shares were up around 7%, Netflix shares down around 3%. Paramount will now need to convince Warner shareholders that its offer is better. Harris Associates and Cessa Capital are among Warner's biggest shareholders, topping bids emerging after a company has agreed to deal with another buyer are relatively rare in the world of mergers and acquisitions, though they can happen with a particularly coveted asset in an industry that is really up for sale. Thank you, Lauren Thomas from Wall Street Journal, for that article. Very timely and very informative, as it affects a lot of people actually that are watching TV and things like that. All right, stay tuned for the next segment. So check this out, Mortgage News Daily. So I have this app. You guys should go out and download it. Not affiliated, obviously, but I really like tracking the mortgage market and see what interest rates are doing. It looks like today, December 8th, 30-year fixed is at 6.36%. 30-year FHA, 5.92. 30-year jumbo, 6.45. 7.6 SOFR ARM, 6.05. 30-year VA is 5.95%. So 15 years fixed is 5.8%. Okay, so 5.8 if you're trying to get a 15-year loan. So mortgage rates could see more volatility next week. Average mortgage rates drifted slightly higher to end the week, though they remained under the levels seen on Monday and Tuesday last week. Even then, none of this week's movement was especially abrupt. It's interesting considering there was a decent amount of economic data throughout the week. It could be that the rate market is simply waiting for the heavier hitting events on the horizon. Next Tuesday's, which is tomorrow's job openings data, is on the watch list. It will be the first major October employment data from the Bureau of Labor Statistics, the same agency that publishes the big jobs report since the end of the government shutdown. That's especially notable in this case because we won't ever get a full jobs report for October, and the portion that remains won't come out until the following week. Then on Wednesday, the Fed will announce its rate decision. That would be in a couple days from now. So markets are fairly convinced the Fed will cut rates, but the confidence isn't as ironclad as normal. Additional surprises could arrive with the Fed's dot plot updated rate forecast for each of the Fed members, as well as Fed Chair Powell's press conference. As always, keep in mind that a Fed rate cut has no bearing on longer-term rates like mortgages. It's actually been more common to see mortgage rates rise following Fed rate cuts. All right, that's Mortgage News Daily. So that's all I've got on the mortgage space. Let's move on to the next segment. So thanks for tuning in to the Northbound Wealth Podcast. I do want to talk about the top holdings in the SPY, ticker symbol SPY. And I have it pulled up on my Y charts, so I'm able to look at the holdings. Okay, so I'm looking at the top 25 holdings. In particular, I'm going to look at the top weights, like above above 3% or above. And what's interesting is we've got 6 companies that are 3% of the weight of the S&P 500 index, or the ticker symbol SPY, which tracks the index itself. It's a ETF that we trade all the time, one of the largest ETFs out there. Broadcom is 3.06%, coming in that 7th position. Alphabet, technically, because if you add the 8th position and the 6th position, they are one of the top 3 positions in the S&P 500. Next would be Microsoft, then Apple. So Microsoft is 6.1%, and Apple is 7.11%. NVIDIA comes in at the top position of 7.63% of the index. What's crazy is if you add in Meta, Tesla, Berkshire Hathaway, JP Morgan, Lilly, I mean, all of those companies represent more than a 1% position. Below 1%, it starts out with like Visa, Microsoft, Exxon, J&J, MasterCard, Netflix, Palantir. So all of those companies are really driving the U.S. economy, honestly. It's the consumer doing that, but their businesses, diversified business models, a lot of them are representative of the U.S. markets in many ways, the global markets. So there's a lot of talk out there about over-concentration. There's too much concentration in the indexes. But over time, what you see, if you study it, is that a lot of the lead positions will revolve and change. It's not always just one company or 2 companies, albeit they can have dominance for decades at a time. But the same companies in the mid to late 90s are not the same companies that are in the top 10, with the exception of Microsoft. So, Microsoft is kind of that anomaly. It's always kind of been up there in the top 10. And that's been pretty profound. They've had to reinvent themselves an awful lot over the years and decades. But that just goes to show you how companies with great management teams can adapt and change to market conditions, the current environment, and then the future environment, especially, and anticipating what they need to do to continue to remain on top, be profitable and successful. So it's very interesting to see how this all plays out in the markets. You can look at the VOO, the IVV. VOO is Vanguard's S&P 500. Our firm holds both VOO and SPY and some IVV, obviously. All 3 of those are S&P 500 indexes, and they all look pretty much identical. I anticipate that AI boom is going to continue. I also anticipate that these tech companies are going to continue to grind higher. They may not make the gains that they have over the last 3 years, but there's going to be some broadening out with the application and adoption of many of the other S&P 500 cohort companies, as well as the Russell 2000, the mid caps. It's a pretty amazing time that we all live in this technological revolution age. That's the new industrial revolution. I think you would be wise to participate in it, but watch your weights. You don't want too much money into one thing. Like, you don't ever want to have all your eggs in one basket, but you can sure have a great basket of high conviction, high quality companies, great ideas of companies that are going to progress forward and be profitable in the future, have great earnings. And it would be wise to participate in that over time. I think participating in the markets is a beautiful thing and one of the greatest wealth creations, if you will. If you save and invest over time and over a long period of time, you can make an awful lot of money investing in the stock market. And you can do a very good job participating in that growth of a lot of these companies go through. And so try to beat back all the naysayers and the fear mongers that try to keep people from investing, and look for opportunities. Talk to your financial professional if you have questions, and get aligned and get invested and keep your money working hard for you, as interest rates in the future are likely to kind of come down a little bit based on what the Fed is talking about. All right, those are some thoughts for this week. I'm glad that you guys are here listening. Stay tuned for future episodes of the Northbound Wealth Podcast with your host, Brent Foster.
Whether you're just getting started as an investor or you're managing a multi-million-dollar portfolio, Northbound Wealth Management has the solution for you. It all starts with building the right financial plan. To speak with a financial planner today, visit northboundwealth.com. Don't forget to check us out on youtube.com at Northbound Wealth. And make sure to leave a rating and review on your favorite podcasting app. Thank you for listening.